Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, today we're going to talk about a very basic covered call trade. Here's the deal. Since I did my video right here, where I have made $96,000 in a very short 2.5 years, I'm getting many of you saying, hey look, I have been watching your videos and I am excited, but look, I don't know how to do it. I don't know where to begin. So today's video is the very basic idea of what the covered call strategy is. There are a lot of people out there that are interested in this strategy, but they just don't feel comfortable with it. I feel this channel is about me showing you my trades, we talk about it, and you learn something. But I also bring it to you straight talk style. Many times I've told you that I used to watch all those old covered call videos, and man, they would talk all the highfalutin lingo of intrinsic and extrinsic value and all this blah blah. Look man, I've been trading this for 2.5 years and I never use those words. And I suspect many of you feel the same way. And that's why I bring it to you straight talk style. Because look, if you're showing me how to do something and you explain it to me in the most basic form and you show it to me a couple times, I guarantee you I'm going to learn it quicker. I'm going to understand it better than reading some dry ass book that has all those big words in it. But here's the deal. Once you learn it, it starts to flow like water. Now for me, I have a mentor. His name's Jerry. He's right there. Talk about him all the time. Because quite frankly, without Jerry, I wouldn't have had this success and we wouldn't be here on this YouTube channel. Jerry sat down with me and showed me this strategy. Covered call writing, cash secure put selling. We talked about it. He held my hand as I made simple, easy trades with the stocks that I own. And I started to get the experience. And that's why I tell you all the time, if you open up that small brokerage account and do your first safe, comfortable trade and you make money, even if it's a little bit of money, it's that experience that really is the wealth here. Because once you do one trade, two trades, three trades, you don't need my channel anymore. The reality is, once you get that experience, it begins to flow like water. And that's why I love come to the channel, try to motivate and inspire you, and show you my trades, talk about them, and maybe you learn something. Now look, before we get going, if you like what you're hearing at the channel, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. And hey, what we're doing is this. I'm almost at my goal of 50,000 for the year. This is unbelievable, right? But what's important is that I've learned a skill. And Jerry and I talk about my wins and my losses and the money I'm making. But look, at the end of the day, it's about learning that skill. See, I'm not in retirement yet. God willing, I get to retirement. Man, knowing that I have an investment skill that could bring in steady monthly income, man, that's worth the price of admission. And I'm telling you now, over the past 2.5 years, I have had steady cash on cash returns. And I haven't done much heavy lifting, because once you learn this and you get your experience, you too can do it. And look, I just crossed 20% for the year and I'm beating the market. And that ain't no BS. The market's up about 7%. And I don't know where it's going to end with about 2.5 months to go. But what I can tell you is this. I only have one trade on the books right now. So those profits are booked. That's cash on cash, 20.7% in the bag. And that's what jacks me up about this strategy. Because when I used to swing trade and try to day trade, I would feel good when my stock would rocket higher. And I'd be buying everybody drinks, right? But then the stock would tank and then I'm in the gutter, right? Look, I have a buy and hold strategy for most of my portfolio. And look, I get that. We have to be in the market. My best friend always told me, look, wealth is created time in the market versus timing the market. And I get that. But what I did 2.5 years ago is I chipped off a little bit of my portfolio and used that cash to sell premium, write covered calls, and sell cash secured puts. And that is what we're talking about here. I am cash on cash over 20.7% on the year. And remember, last year I made 18%. And I'll tell you what, this strategy has proven to be successful and it keeps me motivated to keep doing it. And that's what I love about this channel as well, because you'd be surprised. I love making trades. I always tell Jerry, can't wait to share this trade with the channel. And hey, look, I appreciate all the love you give me when you bang that like button. Let's get to that Microsoft trade and I hope you learn something. All right, let's talk about that basic trade and why I didn't create a slide for this for the time that it took for me to write this on screen. I'm not sure. But look, I'm a one-man show. I always appreciate the runway you give me to land this sucker. Now here's the basic idea. We're going to buy 100 shares of an optionable stock. Now what does that mean? On Wall Street, stocks can be optioned, meaning somebody can buy the right but not the obligation to either buy shares from somebody or put shares to somebody. Now what we're going to talk about today is a covered call, which means I own 100 shares of stock. I mean, everybody's heard of that, right? You buy 100 shares of stock and you hope it goes higher. That's the typical buy and hold strategy. But what we're going to do in this strategy is we're going to take that same 100 shares of stock, in this case Microsoft, and we're going to go ahead and give somebody the right to take those shares away from me at a higher price. They call that the strike price, and it's right there. In this case, we're going to give them 30 days. Now, stocks can be optioned on a weekly basis, monthly basis, 3 months, 6 months, hell, all the way out to 2 years. But to keep this super simple and right here where we could actually touch and feel it, what we want to do is buy that 100 shares of stock and we're going to give somebody the right to take our shares away from us at a higher price. They call that an out of the money strike. Now, not to confuse you, Microsoft is trading at 112. An at the money option would be 112. An out of the money option would be a higher price, say 112.50. An in the money price would be 111.50. So options have in the money, at the money, and out of the money strikes. And we get paid a premium based on the option we pick. Now, again, to keep it simple, we're going to pick that out of the money strike. We want somebody to take our shares away from us at a higher price so we can collect a little bit of premium, that money they pay us, to allow them to buy our shares higher. And we're going to pick up that stock appreciation from the current price of 112.13 to that out of the money strike that we pick. Now, we're going to talk about that here in a minute, but let's continue with the basics here. We're going to buy 100 shares of stock. We're going to pick that out of the money strike for which we want somebody to take our shares from us. And we're going to pick that time frame. Now, in this case, I'm going to pick that nice 30-day time frame. Now, what does that mean? Look, somebody out there in the casino that is Wall Street is betting that Microsoft will go higher. Now, as I will explain, the premium we get paid per share, and it is a mere fraction of what the current stock price of Microsoft is trading for. Now, what they're doing, they're placing a bet that Microsoft will go higher. Now, regardless of what they do with the option they buy, okay, the option they're buying from you, you don't have to worry about that. They're either going to take your shares from you at a higher price for which you've made money, or they're going to sell that option to somebody else on Wall Street. So again, focus on your 100 shares, not what the other person is doing. And real quick, before I move on, understand that on Wall Street, there's a seller and a buyer. That buyer is some person in the greater stock market that's taking a bet that Microsoft's going to go higher. Again, they don't necessarily have to take your shares. They could actually sell the option that they bought from you. So it doesn't matter what they do. Don't focus on that. Focus on your 100 shares. Now, that time frame, I like to use 30 days. Why? Because it's nice and tight. We're not going to have our shares obligated to somebody for a long amount of time, right? We want them to make a decision every 30 days, 30 to 45 days. Now, we're going to get paid a premium for this because remember, we're giving somebody the right but not the obligation to take our shares away from us. And we're giving them 30 days to do this. So we have to get paid, right? Because I'm risking holding Microsoft for 30 days for this cat to decide whether he's going to take my shares away from me higher. So I need to get paid. And that's where that premium comes in, or our covered call income, because they're going to pay me a per share premium to give somebody this right. Now, in this example, I'm going to say it's a 30-day covered call, and I'm going to say we're going to get $1 for this. Let's talk about this trade. So as you can see here, we're going to get paid $1 per share to give somebody the right but not the obligation to take our shares away from us higher. And I picked the 114 strike price, meaning I'm going to let somebody take my shares away from me at 114, and I'm going to do this for 30 days. Now this turns out to be a $2.87 profit per share. If my shares are taken away from me at 114 for 30 days, that turns out to be a 2.5% profit in 30 days. So what's going to happen is this. after 30 days, as we get near that time frame, remember that time frame I talked about? They call that expiration. And that expiration date that wants to take our shares at 114, they are going to have to make a decision if they want to buy our shares. Now, if Microsoft is above 114, clearly they're going to take our shares. They paid for that right. Now, if Microsoft is below 114, why would they take my shares at 114? They're not. They're going to let this option expire worthless, meaning they're not going to take my shares at 114. So to understand that, remember, we gave somebody the right to take our shares at 114. So if the stock doesn't finish above 114, they're not going to do it because they can actually go and buy the stock cheaper on the open market. So again, remember I mentioned this person on the other side? They're the gambler here. See, we are the house. We are the casino. We are dictating the terms. I own the shares. I'm giving somebody the right, but not the obligation to take my shares away from me at a higher price, 114, and I'm only giving them 30 days. And I expect to be paid for that. And in this case, I get paid $1. So this trade sets up to make 2.5%. If they take my shares, they're going to pay me $114 per share, and that's going to be deposited into my account. And I'm going to have cash. And remember, I collected that $1. So technically, I've made $115 on this trade. So I'm going to have $115 per share in my account. And I'm going to be able to then go out and buy another stock and do this again. Now, if Microsoft does not finish above 114 on expiration, well, that person's probably going to elect not to buy my shares, and chances are I'm going to keep my Microsoft share. Now, what we're hoping here is that Microsoft does not fall that much, so we can then do this again. And in fact, that is the risk. Because remember, when we give somebody the right to take our shares, we actually have to hold those shares for those 30 days. Now, I'm not going to complicate this or muddy the waters by talking about buying that option back or what happens when there's an ex-dividend date. Look, there's all kind of factors that you are going to learn. You're going to pick up through my videos and other videos on YouTube where you're going to start to understand this strategy. But this is the basics. And I know you're sitting there saying, really? I'm giving somebody the right to take my shares away from me at a higher price for a time frame of 30 days and I get paid for that? What's hard about this? And that's my point. My point is this. We can learn this, and when you get that experience of doing a trade like this, man, after your second or third trade, it just flows like water and you don't invest much time. In fact, I probably invest a couple minutes, if that, per trade. I mean, I could look at a trade, look at a chart, and know what I want to do. I mean, that's what I mean by flowing like water. And I do this on 5, 6 stocks per month. We do this time and time again. And oh, by the way, that 2.5%, that's cash on cash, meaning I bought 100 shares of Microsoft at $112 X. That means I invested over $11,000. Well, if my shares are taken away from me, I'm going to have cash. I'm going to have $11,500, meaning that's a 2.5% profit. Well, that's cash on cash. That's in the bag. So a lot of times you'll hear a lot of people talk about annualized return. Now, see, this was a 30-day trade. This isn't 2.5% for the year like some of the bonds pay. This is 1 month, 30 days. So you can imagine if we do this every single month with the comfortable stocks that we know, you could potentially make that 20% that I talked about earlier in this video that I've made. And here's the deal. You can do this month over month over month. And I really encourage you, continue your free learning through all the videos that are on YouTube. And look, you too can do this just like me. And one last thing. Notice down here at the bottom, look, I take my covered call profits and I spend it. And that's money in my wallet. Because remember, this for me is an experiment in retirement. Can I do this strategy I just explained in retirement to generate that monthly income I may need to make the ends meet? Well, the other side of that is a lot of investors would say, John, this reduces your cost basis. Meaning you bought it $112.13. You got paid for this covered call transaction $1. Remember, this 2.5% gain includes stock appreciation. So if your shares are not taken away at 114, you still collected $1. So you reduced your cost basis on your Microsoft shares to $111. You see how that works? And you can write another covered call in hopes that your shares are taken away higher. Hey, look, this is what I do all the time. And in fact, I've done this hundreds of times. And as you can see, just this year, look at all of those trades and look at all those green trades. which absolutely reinforces my belief that this is a very conservative strategy that we can really profit from, make those gains, and really feel good about what we're doing. And what we're doing is crossing the $100,000 mark after just 2.5 years of using this very conservative strategy that I love so much. Hey, look, if Jerry had told me that I could make $100,000 in 2.5 years, I would not have believed him. And this is as surprising to me as to anyone else. Look at that. In 2016, it was $18,000 for 6 months. Then 2017, I was putting the pedal to the metal. I made $39,000. And this year, Jerry said, look, you have to up your game and go for $50,000. And right now, with 2.5 months to go, I'm very close to achieving that goal. But here's the deal. Along the way, we have crossed the $100,000 mark of covered call and cash secure put profits. Hey, look, before I go, if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. And hey, I want you to share this video. This is going to be part 1 of a 3-part series for which I break the covered call strategy down in its most basic form, so we can get all those people that are eager and motivated to do this strategy to learn it, feel good with it, and then try it. Remember, I told you 2.5 years ago, one of the reasons I kept talking to Jerry is because I didn't want to screw up. I felt apprehensive. I wasn't comfortable. He helped me with that, and then I got my first trade. And when I did my second, third, and fourth, then I feel comfortable. Then it flowed like water, and here we are today. Hey, look, until next time, I hope all your covered calls are profitable.
All I see is signs, all I see is dollar signs.